Good. Hey, happy Friday. We made it. It's the end of the week. Man, you win some, you lose some. And if you were watching yesterday's show, you heard me say, yeah, there's more pain coming for Snapchat and Pinterest. Well, what do I know, apparently, because those stocks blasted off after hours last night. We'll talk about those moves. We'll talk about Amazon, of course, leading the charge here this morning, although we are leaking overnight. That's probably going to be our lead story of the day is the overnight leakage. We'll take questions from our chat as always. Good morning, everyone. What's up, Raul, Mitch, RG, Ben, Christian, John, Pulverizer. It's a new one. What's up, man? How we doing? Good morning, everyone. Smash that like button for me. Let's get the show on the road.
This is Pre-Market Prep with Joel Elconin, Dennis Dick, and Spencer Israel.
All right, y'all could have been watching the opening ceremonies of the Olympics, but nah, you're here with us instead. Welcome. Joel, Dennis, good morning. How was everyone's night?
Doing good here. I just this price action. I mean, you guys won't ever find me speechless, but I'm almost speechless here. We went to 40.
I am too.
Yeah. Dennis, is there any? I mean, we're up. Have you ever seen a market up 8 handles that has looked as bad as this? I mean,
No.
I can't even put it into words. We got up to 45.28 last night, up 60 handles. We went into red by 8 handles. Now we're up 8 handles at 44.77. Crude busting out 181 at 92.08. Gold up 840 at 18.12.50. Silver, that's up too. That's up 15 cents at 22.52 and a half. Bitcoin up and down, up 16.85 at 37.950, and Ethereum's up $257, 28.32.50. Triple D. I talked to you this morning, and there was opportunities last night, but it's just a coin flip, right? I mean, could you ever imagine we were giving all of that back last night?
I did not think that. And obviously, I'm saying sell rips, and you're looking last night, and you're shorting some stocks, and you're like, you just don't think it's going to give it all back. Though, when you come in, and you're like, why didn't I short everything? Why did I not just short the world last night? Because I mean, that is unbelievable. And Amazon can go up. At one point, it was up almost 500 points. It's given some of it back. It's up 333 now. But, if you would tell me that Amazon was going to go up 300 points on its earnings report, Snapchat was going to rip 60% on its earnings report, and the S&Ps were going to go red, I'd be like, math can't add up. Well, that's what we're seeing here this morning. I mean, we have the tail of this market, and this tail of this market is sell rips, and don't ask questions about it. And that is exactly what occurred here overnight. Joel, tell us about the highs. When did we start leaking? Show us the chart.
Yeah, I mean,
it's an unbelievable, sell-off from the highs.
Yeah, China reopened after not being open for
Can we see the
a
charts?
week.
Oh,
did I
show
not
us the
show?
charts from last night. Yeah, show us,
Okay.
the big rep off Amazon. You can see the top
Right
left
here.
chart you're looking at. That's
Yeah.
the Amazon report. We started ripping. It's 3%. It's 3.2. I think it's 3.2% of the S&P. So it's a pretty good chunk when you're ripping up 17%. It was up at one time. So, and then we were up all night. We were up all night until about 3 o'clock when Europe opened. And then we just started slowly leaking. Why?
Right here.
Russia?
I don't know.
Well, is there a headline? Because I never really saw something that was like, oh, this is the reason. It was just a slow leak.
Yeah, I haven't seen it. I mean, I looked, and we had, Spencer, and I know you looked at it, and it was just someone that they just came in. It wasn't even like sometimes at the 4 o'clock open, of the stocks, the ARBs come in, but by 4, I mean, it accelerated after 4 o'clock.
Yeah,
but
people were excited to get the hell out of stocks.
Yeah, they were looking. You're like, you got to be kidding me. So,
wow. I mean, that's just a bad tape. And obviously, we had the big sell-off in the S&Ps because of Facebook. And you're like, okay, well, it's going to be opposite day here today. Amazon's going to bail this market out. We're going to go back up near those highs, and everything's going to be rosy. And that is not what has occurred. The bigger issue, though, for traders here is that we have a big jobs number coming up in 24 minutes. So everything's going to change again. So this has been a rip-roaring, huge overnight range. Nice for trading. Selling the rip, working wonderfully. I wish I would have sold more stocks. I did. So give us the Amazon. Let's go take it to Amazon because this was the reason. This is the reason we're up. And this is the reason why we ripped so much last night. Give us the details on this Amazon report. That was so wonderful.
What a report. First off, Amazon. The headline number in their release was the earnings per share was a GAAP number. Very often there is a big difference between GAAP, generally accepted accounting principles, and adjusted earnings per share. The GAAP number, the one that everybody was citing last night, was $27.75 per share. That's what they earned per share on a GAAP basis. The adjusted number was much more reasonable and down to earth. The adjusted number was $5.80. Now, that is still significantly above where the estimates were, but people saw $27 per share. This company
Algo's read that.
Crazy.
Drowning in money right now. What are they doing? Anyway, so it wasn't quite that crazy. However, it was still the good number. Sales also came in above estimates as well. However, a lot of those profits stemmed from their investment in Rivian. That gets a huge asterisk here. Because
they sold their Rivian stake.
Yeah. Well, I don't know if they
all of it.
Well, if they've got the book on the books, I would assume that means
I don't know if I don't know if they're sold out of it entirely, but they did book some profit.
They booked a big gain in it.
Yeah, they booked a big gain from their Rivian stake. So right, so that deserves the earnings here deserve an asterisk for that reason. Now back to the good news. Amazon Web Services is a monster. You cannot stop it. Okay, I said on the At the Close show yesterday that the bar to clear was somewhere in the $17.3 billion range for their AWS revenue. It was actually $17.8 billion. So they cleared that bar. AWS is growing 40% year over year. Like clockwork. You cannot slow it down. It's a monster. So it was a good report. Was it as amazing as everybody first thought when they saw $27 per share? Probably not. They are raising the price of Amazon Prime as well, from $119 a year to $139 a year. So a $20 price hike on that. It was a good report. I don't know if it was as good as the initial price spike would indicate, but it was definitely a good report.
I mean, I'm looking at the sales.
Wait, let me add this. The Q1 sales guidance, that's what you're going to say.
It looks light.
Yeah, the Q1 sales guidance.
Yeah, they gave it light. No one cared about it. No one. It was like that was. No one cares about that.
Yeah, the Q1 sales guidance, I have it in the pro here. They guided a revenue for the current quarter, $112 to $117 billion. Estimates were at 120. So it was a little bit light on that Q1, on the forward-looking number, which is more important. But again, to Joel's point, nobody saw that in the first few minutes. Clearly.
I'll tell you how much I loved this Amazon report and the action off of it. I went into my long-term account and I sold half of my long-term Amazon shares, and I had no intentions of doing that.
Wow.
But because I don't feel like this was a great report, I feel like it was an okay report, and it's going to give me 17% because Facebook set the bar so low. I'm a fool if I don't use that opportunity to lighten up. Because, in long term, meaning I actually bought this right during the COVID crisis in 2020. So I'm not one of those like 20 years on Amazon. I stuck in the long term account back early 2020. I put the double size position on. I put half on for a trade and I kept half for an investment. I bought it 2,200. I got up, it went up to 3,000, like literally within like a month. And then obviously continued. And I sold half of it for the trade. But I held the other half as the investment, which was a full-size position because I had a double-size position on. And it's just, been in there forever, for the last year and a half. And I was like, well, I think I'm just going to hold these shares forever. Well, you look at this and you think, okay, it just came down to 2,700. I bought at 2,200. I don't want to make this trade go red eventually. It could have been a bad report and actually could have went red. And I think that they overshot. I think that they literally just gave you a gift last night. And I was like, so I sold half of it. I didn't sell it all. I sold half of what I have left. Wow. So maybe I should have sold it all, but you get up to that 3,200 where major support was, the breakdown happened, the technicals all line up. everything kind of lined up to sell that rip. And I love selling rips, and technically it lined up as well. Maybe it gets back up there. Maybe we have a jobs number that it's going to be some big movement here in 19 minutes. It's going to move it around. But this market, when you sell the rip in this market, 3 days later, you're happy you did it. Exactly the reason, exactly opposite to 2020. So I think when you get these gifts overnight, Facebook set the bar so low. You have the, algos reading the headline $27 because they don't dive into the details and they think that they blew it away. I just think you ring the register and you take your profits and run.
Yeah, I mean, I think just the move yesterday. I mean, and I'm going to go to the bottom right chart there on the monthlies. I mean, the reason I moved that line up to 3,300 is because that's where someone stepped in, and someone just mentioned, 15-minute chart. You can't pay a lot of attention to it, but it hit 300, it hit 300, and then it took a little break, and then it hit 3,300 again,
It went
and
to
then it was like,
3,300, eh?
3,300, yeah,
Holy.
and then you were thinking,
I
okay,
didn't get 3,300. I got out before that.
who who's gonna buy this at 3,300? Who in the right mind after I don't even know what the close was. The close was what, at 27.80 or something like that?
Yeah, yeah.
I mean, if you're
Up
buying it
20% almost.
yeah, for this kind of stock, and then, someone was just I mean, what if you just got stuck, and once again, we'll go back to the optionality and stuff. What if you were just a bag holder in the 3,000 calls? I mean, holy, and you're looking at this thing. I don't even know what they went off the board yet. I don't have my options platform open, but oh my gosh. What if you paid 50, 60 bucks, 70, 80 bucks for those things? Those things are expensive. And then boom, I don't know. It's a slow leak. I'm just going to say I'm going to keep 3,300. That's 8-star resistance. I'm going to see where it closes today. And then I'm going to use that as a gauge for what the big boys do. If it closes, let's say it closes at 3,100, then that's my gauge. If it holds 3,100, goes back, takes out to 3,300, then hey, it's back on. But if whatever the close is today, that's to me, I mean, it's just such a big move. But
Such a
right
big
back here,
move.
yeah, right back up here. I mean,
Yeah.
I'm glad you did that, Dennis. And I know
I
you
don't know
don't
if I'm
do
going to
that
be
much.
happy in the long run. Maybe eventually Amazon's 5,000 and I got spooked out, in this, little bear market that we're in here right now, which we are, and don't kid yourself, this is a bear market, despite what the indices and SPY will tell you. I just think it's so much so fast. And this is the type of environment where you're selling stocks that are rallying significantly. You're happy you did it. And the gains go away. I mean, that's the problem with so many of these stocks that have had spikes on decent earnings reports. And then you look back and you're like, oh, they start to leak. I mean, even go to Google. I mean, we got right up there.
Yeah.
2
Oh,
days
yeah.
ago, we go to make a new all-time high, or basically kiss a new all-time high right at resistance, 30.40. It opens up there, never looks back. And now we've dropped 200 handles. I mean, from the close, we're bouncing back here this morning, but I mean, it's given back over half of it, just like that on a split, on a 20-for-1 split. This is how crappy this market is right now. So if you're loading up and going on margin and thinking we're going back to all-time highs, this price action's telling you that's not the case. And maybe it's wrong, and maybe you're going to be right, and maybe you want to be on margin but I'll tell you, I'm not going to be. There's a lot of tells here right now. Cameron with great charts a couple days ago showing you these wicked rallies we get in these bear markets. I feel like it's just the calm before the storm. I think it's going to get ugly here eventually. And that's why I'm raising cash. And that's why I continue to sit on cash. But I don't want to go all cash because nobody knows anything. I'm going to repeat it again. We're just guessing. We're guessing. And inflation could easily just start ripping again. And you got to own something. You can't own cash. And maybe they jump into stocks and everything starts blasting off again. And maybe we go back to all-time highs. If you got a 25-year time horizon, maybe you're buying dips right now in your long-term portfolio. Maybe it's not a bad idea. But I just think there's a lot of uncertainty here right now. And that makes me nervous as an investor.
Microsoft too. I mean, it had the report. It had the rep. I mean, this thing got nowhere near back all-time highs, right?
Great report too.
Yeah, great report. That because of Mr. Market, that leaked yesterday. But it just, you haven't. That's the biggest. You had a down month. I know it closed back up in January. You're working on another red candle. You just haven't seen like a big red. I mean, now you're working on your second red candle. It's just looking like people are just ringing the register. It's been a historic run in Microsoft. And then what was the other? Oh, the other thing I just wanted to mention is you want to talk about horrible price action. If you're thinking of buying Facebook, by all means, go ahead, pick the bottom of this. It drops $88 and the rebound is 85 cents.
Yeah, I was gonna say, hey, silver lining, we got to bounce, but
You got a 85 cents after dropping.
PayPal, same thing. I mean, it's making
Yeah.
made new lows again. I mean, this is never again in all markets. When you're buying the first day, usually it gets worse. So I will tell you, this isn't just to a bear market. This is in bull markets too. When you have companies that come out and disappoint earnings, it's rarely done in one day. There is often opportunities on day 3, day 4, because it just continues to wash out. But rarely is that first day the low. Unless you're in a stock that's just like, in a full, bull rally and it's just, a correction into it. But when you get like these misses, it's taken out, making new 52-week low. So I'll correct myself. A stock gapping down on earnings, making a new 52-week low, it never usually is the low that day. It usually continues lower, and usually you get a chance to buy it even cheaper. People learning the hard way with PayPal. People learning yesterday the hard way with Facebook. Do I think the low of the move is in on Facebook? No, I do not.
And Facebook, I mean, the amount that Facebook fell yesterday, I'm trying to find a good comparison right now. It basically fell the equivalent of an entire Comcast or an entire Verizon, a little bit more than that actually.
How much market cap got chewed up there?
$232 billion. It fell the equivalent of Costco.
Yeah.
It fell an entire Costco, the company, not a store.
Yeah.
Like.
And here's the problem. Like Mark made a good point on it too. I think Facebook's going to be a buy at a certain point in time. I probably will buy it at a certain point in time because when these things these major holdings get killed, but there is competition coming for their core businesses, and the Meta thing is a ways away. Maybe eventually the metaverse is going to be, Facebook's going to rule the metaverse, and we're going to be like, wow, what an opportunity it was to buy it at $238. But I think the metaverse revenues, and it's so far away. Like we're so, I think maybe we look 10 years from now, we're all doing, more things in the metaverse, but I don't think the metaverse is coming tomorrow. And I think a lot of these companies that you're betting on, that this is going to be the way to play it. And there's good ways to play it. But I'm not a full believer in it yet. I'll just say that. Maybe I'm going to be wrong, but I'm not a full on yeah, we're going to be doing all the things. We're going to put on our goggles. We're going to be swinging in the air. We're going to do all these things. It, to me, looks like a video game.
How do you swim in the metaverse?
Well, you can. You'll just be in a pool, Joel, and you'll be going like this. You'll be like, oh, this is so refreshing. I mean, that's what it is. I guarantee they already have that. But this is just like, remember like Wii on Nintendo? Do you remember the Nintendo Wii?
Remember how cool that was? Remember how cool it was when it came out?
It was awesome.
Pretty cool.
I had a Nintendo Wii, and you're swinging your remote. You're doing this. I mean, it's this, obviously just a souped up version of that. So that's why I'm hard pressed to just go and say that, this is, I've got to have all my money in this. You want to nibble into some of it. You want to have some, speculative cash going into this stuff. I'm fine with it. But if you're all in on the metaverse, I don't know if personally I would be doing that.
Wait, I have a question. Is Meta a value stock now?
Yeah, it always was. Facebook was a value stock at P of 22. It's been a value stock for a while. Is it a value trap? Is the better question.
I thought that was going to get some laughter. I guess not.
Is it a value trap? Is the better question. Because the PE is 18, and everybody in my stream is telling me, how can you go wrong when it's got a PE less than the market multiple now? Well, if the core businesses are under attack,
going down,
and the revenue isn't growing, I mean, that's not that cheap then, because you see some core businesses that revenues don't grow and the PEs can trade a hell of a lot lower than that. So I don't know. I want to own Facebook at a certain point in time. I think if you have a 25-year time horizon, you're buying at 237, I think you're going to make money because I think Zuckerberg's smart.
Eventually.
I think you will eventually, but I think you're going to get it cheaper here yet. So I don't think you need to hurry here. I don't think it's bouncing back to 290, 300 tomorrow, unless Bill Ackman comes and buys a big position here overnight and tweets out about it, because I never thought I'd be able to
let's move on
to Zuckerberg at these prices.
Let's move on to Snapchat here. Snapchat saw Meta's lack of user growth, and they said, "We see your lack of growth, and we raise you 20% year-over-year user growth," because that's what Snapchat said last night. Also, their very first quarter where they were profitable on a net income basis. You can always nitpick profitability. You can look at EBITDA, net income, whatever, but it was their first quarter profitable on a net income basis. So, hey, kudos to Snapchat. And again, user growth, MAUs up DAUs, daily active users, up 20% year over year. And then real fast, the EPS and the revenue both came in above estimates while we're at it. So, hey, good report.
Yeah, the bar, and this is what I was saying, and I was like, I don't like Snap long term, but I was like, I think it bounces just because the bar was set so low. I had no idea that it would bounce 60% at one time. I know it's up 40 now, but it was up 60 last night. I way underestimated the power of a bounce. So I wish I would have bought it long going into it. I couldn't, because I still don't like the company long term, but it just was so oversold. Facebook literally, the bar was like under the ground. They just had to walk on the ground to get over. And then it was an okay report. It was a pretty decent report. So it wasn't like, if Facebook wouldn't have got slaughtered, Snap wouldn't have been up as much as it was. But Snap was down. Let's give this perspective. Snap was $32 before Facebook reported, and then they pounded the hell out of it down to 24, which was just ridiculously overdone. This brings it back to 34. So it's probably in the right spot, because you had an okay report and the stock was 32 2 days ago. So you get back to really where, these highs are 34. People paying 40 last night, that's an overshoot. You're paying up 60% in this market. Don't chase, man. Don't chase. So, is it going to continue higher from here? I don't know. I feel like it's where it should be. 32, 34 for now. I think when we look at Snap a couple years from now, 5 years from now, I think it's lower. So in case of I don't want it, Facebook 5 years from now, I think is higher. Snapchat 5 years from now, unless they completely reinvent themselves, I think it's lower. But maybe they get new products. Maybe they get involved with the metaverse. Maybe, Snapchat can figure it all out, and then maybe I'll change my opinion. But right now, I would rather own Facebook than Snapchat, but I'm not touching either.
I contacted Matt Tuttle last night to see if I could start an inverse ETF. If Dennis and Spencer both agree on the same thing. More Spencer. Mitch, could you help me out here?
You remiss not to at least acknowledge the effect that Facebook is having on other stocks here this morning. Pinterest and Snapchat and Twitter, but Pinterest and Snapchat in particular, because they report earnings.
Well, Pins reported, didn't it?
The bar is low.
No, wait, Pins reported last night.
On the other hand, I really don't think it matters. I really think there's probably nothing that they can say that would turn the tide right now for either of them.
Okay.
Pinterest, Joe and I talked about this on the At the Close yesterday. They have their own issues. They've had a number of key executives leave in the last few months. If Facebook cited Apple's privacy policy last night, Snapchat has already cited that. Pinterest has already cited that. So they will probably just continue to blame that. And also, these are advertising-based businesses, and when you have a supply chain problem and you can't get product out, why would you advertise, right? So that's been cited as well previously. Facebook said that last night in their report. So I think that the bar is low, and I think there's frankly no reason to look at Pinterest or Snapchat on the long side.
Yeah. All right. So that's a show.
Oh my God, that might be the worst call on the show of all time.
All right.
Wait. I don't want to play the whole thing, but Dennis, you later on in the clip, you said that you thought it might be worth $2 billion. Later in the clip.
But what did I? That's
no, I know. No, you
that's
said
disingenuous.
You said the low bar.
I said 4 times. I think it bounces. So I was arguing with Spencer.
I agree.
And then I said I would not touch his long run because I think it's a lot lower. So I'm going to say the same thing. I actually called this. I call a lot of crap bad, but I called a bounce on this stock.
I know.
So I mean, just because I said long term, I wouldn't touch it, and I think it's worth a hell of a lot less than it's trading at.
Joel said at the close yesterday, Spencer, hey, you were right, and I was like, well, I'm not right yet. I'm not wrong yet either. Give me until
I think you're going to be right in the long run.
Give
here.
me until the close today, at least.
We're going to have to give you longer than that.
We'll give you a lot. All right.
I don't think I'm wrong yet.
I'm sorry, Spencer. Because I did my article on that, and I put the Dennis's theory in about the low bar, and they put that out. I mean, that article went out about 12:40. But anyways, I got a level that I want to give you guys and girls and gals, everyone trading. The level of the day.
Okay.
34.25. Holds 34.25. Okay, let's go after 40. Let's go after 40. If it doesn't hold 34.25, I can absolutely give you no level in which I think it will be support at. It probably will hold on to its gains for the day. Needs to hold 34.25, and that's an easy one for you guys. Tuesday's high, 34.20, or excuse me, Tuesday's high, 34.20. Wednesday's high is 34.25. Enough said. That's it. We're done. Sorry, Spencer. Don't be mad at me, but that was just too good. And thank you, Mitchie Mitch.
I don't get mad. I don't get mad about these things.
Okay, let's go. Let's get another earnings report.
I still think I'll be right. Pinterest is the same thing. Pinterest is the exact same thing as Snapchat. Low bar, and they clear the low bar.
It's all that matters. This market is so stupid. It is. It's so simplistic. The bar goes low. You should just start a hedge fund that trades the bar. Call the hedge fund the bar. And we buy stocks when the bar is low, and we sell stocks when the bar is high. But and you know what? You'd probably outperformed 99% of the money managers out there with that stupid strategy. But it works. It freaking works.
Also, Pinterest had a user decline. They had a decrease in active users. It doesn't matter, apparently.
It doesn't matter because the bar was in the ground. They hammered everything. They're like, oh my God, I never want to own a stock again. That's what happened. And then they're like, they had to go up. Everybody sold.
I knew this was going to be a great segment. I was cracking. Lisa's like, "What are you laughing about last night?" I'm like, "Oh, we're going to have a great segment on."
I got it, and I got to hop off for 2 minutes. I'm going to tell you one thing. It's going to be nuts. We're going to have some major volatility here.
Well, you know why?
Wide.
You know why it's going to be nuts? Because we have to, off this number, the entire world's going to decide whether we're going to have 8 interest rate hikes this year or we're going into a recession.
It's one or the other.
Yeah, it's one or the other.
It's 8 or it's 0.
All right. There's nothing in between here. I did get to do any snap or any pins numbers here. That's 32 and change. Wow. That there was nothing there on the dailies, but let's get a little bit more, level headed and think about $30. That would be, if it got up to back to 30, I don't know. It might, if I was trading after hours, it probably wouldn't have gotten through 30, but there's a double top there, 30.08, 30.27. So,
all right,
let's get back up there. Get back up there.
Let's pull the S&P futures here. Here's what we have for our estimate for this January jobs number. Our estimate is for non-farm payrolls to come in at around 150,000 jobs added. That would be well below the December number of 199,000 jobs. Unemployment rate is expected to remain steady at 3.9%. Average hourly earnings expected to decrease slightly month over month and be up half a percentage point year over year from 4.7% to 5.2%. Anyway, watching for the number right now. And ADP was weak. Let's not forget that. Sorry, ADP was weak on Wednesday.
Is it out?
I want to take a guess that it goes into the loss here. I'm gonna guess
467,000. 467,000. These numbers are all wackadoodle here. So again, that's a big beat on as far as jobs added. How does that make any sense when you have people leaving their jobs left and right? 4 million people left their jobs in December, but apparently in January we added 467,000 new jobs. All right, whatever. So ADP number, the ADP reported a loss of 300,000 jobs in January. That was out on Wednesday. Now today we're finding out that we added 467,000 non-farm jobs added. This makes no sense. This makes absolutely no sense right now.
It fits right in with the market. I mean, it fits in with everything else.
This is ridiculous. The unemployment rate, 4%, so a smidge above the 3.9% estimate. But what is even going on right now? Seriously, this economic data makes no sense.
Well, I'm letting it shake out here. My first gut is, oh my God, the economy's heating up, rapid inflation, right? Oh my God, we are going to have to raise interest rates 10 times this year because of the rampant inflation. So that, because the economy's overheating. So you just spiked down to 54.50. I'm just looking at yesterday's low, 44.62. And that's the level of control. If we could get back, and I mean, this thing's going to dip and doodle, whatever. But 44.62 is a reset of yesterday's low, so it holds 44.62. Maybe you could get a tad bullish. Here's the thing that I don't like, guys and gals and girls, is that I love my dailies. Where's daily support in this? Where is the daily support? The daily support, I mean, it will find a number in between there. We can't go all the way back down to Monday's low. Well, I'm not going to say that. 43.95.50, not in the 45 handle, not in the 44 handle, but in the 43 handle, 43.95.50. That's your next daily low, folks. I mean, I can't in good faith say, oh yeah, I like 44.40 or 44.30 or 44.20. So that's it. You gotta the market that overnight sell off was the tell. Here you go. Rising interest rates. Gold doesn't make any difference to gold. Gold's flat. I don't know. We'll have to see. I have a feeling we might not hear from Triple D for a little bit here.
Someone in the chat asked what the labor participation rate was. It was 62.2%. All you need to know about that is that pre-COVID we were at like 63.4, and at the lowest we got down to like 60.2. So we are slowly but steadily getting back to the pre-COVID labor participation rate levels. It's going to take a while though. So it did increase a little bit from 61.9% to 62.2% from December to January. But still, this non-farm payrolls figure is a head scratcher. We'll have to look at the report and see where those jobs came from. But you are seeing, I mean, the S&P futures, it's just really just reversal. Literally, it's a reverse situation. We have a cha-cha slide thing going on, reverse for the whole market. Everything is just going down. Look at the banks all going higher. Look at the TLT going lower.
Banks aren't ripping that much. I mean, JP Morgan's up 11 cents. I'm no economist. In fact, I took economics pass-fail at Michigan, and I barely passed it. So I can't make heads or tails out of this job data or what all I know is that you had bad price action last night, and you're getting bad price action right now. So that's it. That's it. That's all I have to say. If we want to go back to start covering Triple D, we might not see him for a week.
No, this is dramatic.
He's in a fast market. This is it. So
thank you, Thad. I didn't see the December revision. Man, if they're going to revise these numbers up from 100,000 to
they don't know what they're doing.
What is even going on out there? How? The entire premise here is that we have to trust the numbers, and if we don't trust that, then we have nothing. But how can you trust the numbers when they're revising it from 100,000 to 500,000? What are we supposed to? How are we supposed to interpret that information? It's impossible. It's impossible.
We're getting some comments here from PJ Shannon. Unemployment benefits ran out, so people have to go back to work. Also, unemployment does not count the peeps that fall out after the max amount of time. A lot of different factors here. Didn't we hear like 43 million people quit their jobs or something?
No, it wasn't 43. It was
4 million or whatever.
It was 4.3, I think. Yeah. So I'm trying to square that circle. How can 4.3 million people quit their jobs, and at the same time we add 500,000 jobs last month? I guess they're comparing different months. They're comparing December to January, but still, I mean, that's a big discrepancy there. Anyway, oh yeah, I didn't even look at the average hourly earnings. How are those? Average hourly earnings up 5 point. That was in line actually. Oh no, I'm sorry, it wasn't. It was better. Average hourly earnings up 5.7% year over year versus a 5.2% estimate. They're also up month over month. So I don't know how to make heads or tails of this report. It is a bit of a head scratcher. All I know is that tech is selling off. That's all I know here. Tech
Well,
selling off.
you know what?
Rate hike coming tomorrow.
But here's the concerning thing. What are your banks doing? I mean,
Oh.
I mean, unless they're bid up and not trading, I still see J.P. Morgan flat at 148.70. Now it's down 14 cents. So, what's the TLT doing? Let's see what that's
Yeah,
doing.
it's dropping like a rock.
Yeah. Yeah, all indications are saying that the banks should be going up, right? For higher interest rates, unless they're just worried about, and once again, I'm getting way over my head here, but, you know, less margins on the yield curve for them to do arbitrage. I don't know. Too bad we didn't get a real economist on here today. But you know what? All you need to do is look at the price action, right? And the price action is not good. It wasn't good and it's been too volatile all week. The price action wasn't good last night. Who knows? We could go down, end up green by 87 handles today, but so far not seeing anything good. And then I'll stick with that number. Monday's low, 43.95.50. That's all I.
Right.
That's all I can give you.
I just pulled up Amazon, Snapchat, and Pinterest. Pinterest, watch out! It's going back to where it started yesterday.
Is it?
I mean, it's at $26 right now. We got to
Oh, you got to be kidding me! That already gave it all back.
not all of it, but almost all
Oh
of it.
yeah. Yep. Yep. Look at that.
Oh,
What about they're still holding on though. Last I looked, Snap was still holding on. So
yeah, Snap and Amazon are holding up a little bit better here.
yeah,
But
they are. They are.
yeah, I mean,
They are.
Amazon's got more room to fall, frankly. So I don't
All
know.
right. Well, listen, we
I
got
would say-
22 minutes. I don't. Triple D might be back on the show on Tuesday.
That's a head scratcher there. So
Yeah.
okay, it's okay. Here's the bottom line: it's a good report, but good news is bad news because good news means we're getting more rate hikes, right? Is that the thought process here? I guess so.
I guess we're not going into a recession. Like all those bows. Oh, I think I already took my Barons upstairs to throw away. But maybe this is as great as maybe this is just a sign of things to come, and we're going to add 1 million jobs next month. Actually, we're going to have to re-import people, right, to bring them in because we're going to need to fill all the jobs. So
Yeah.
that's it.
All right.
Snoo's bouncing a little bit, only down 10.25 now. Look at yesterday's low, 44.62 as potential resistance.
Okay.
But there's a bunch.
Few more stocks on my list, and then we'll get.
Yeah, let's go.
All right. I want to go to Unity. They had earnings last night. Ticker U. EPS came in a little bit above the estimate. They lost 5 cents per share versus an estimate of a 7-cent loss estimate. So they beat that number by 2 cents. Sales came in higher as well, $315 versus $295 million. They gave Q1 sales guidance above estimates. They gave fiscal year sales guidance also above estimates. And it's moving the same direction as everything else is now. So it's tech.
112, man. I just with the price action here, do you really think you're going to see 112 today? I don't think so. In fact, I would just if I was long this thing and I try to look at like positions like like if I had it on, I'd be hoping for 110.41. I mean that was your high on Thursday. Actually, this 110 area was kind of stocked the day before, 108.91 and then 110.41. So 110, that's a good level. Coming back on the downside, you have a nice gap up. If you're looking for a gap fill, the top of yesterday's range comes in at 98.80.
All right. And then I want to hit Bill.com, ticker BILL. Also, tech growthy name. Their earnings was okay. Actually, I think the stock made a huge move after hours. Let me check on some numbers here. Yeah. Top line, bottom line, above estimates. They guided for a narrower loss this fiscal year. Looks like revenue came in well above estimates. So anyway, looks like a good report for Bill. How's it do? Oh,
I just want to say this comment from Michael T. This is the best trading live show. Listening to all three of you makes me feel so good every day.
no, I'm glad that we can feel
Yeah, because we're not always feeling so
about
good.
ourselves. So I'm
All
glad
right.
we can do that.
What's
Bill.
Bill.com?
Yeah.
Well, you can't be either gotta be up 30 or down 30, right? This is a nice move. I don't know about the pre-market. I'm gonna say what's sticking out at me? 220. If you get a rally back up to 220, two daily highs here. You had your opportunity at 220 for just a little bit in the after hours. The top of yesterday's range. Doubt if you're going to see that. That's 179.98. Looks like someone maybe wants to own this thing around 205, but that's certainly not my bid out there at 205.
All right, and then we'll go to Ford here. Speaking of
Ooh.
companies that had a low bar to clear, Ford had a pretty high bar to clear. Their earnings came in light, their sales came in above estimates, and their guidance for the year was in line with the estimate there. They also said that, check this out, they said on average, buyers paid $51,000 for new Fords last quarter. I don't know what it is historically, but that seems awfully high. $51,000 on average.
For what?
For all across the Ford fleet. That's the average price of a new Ford.
The prices of cars are nuts, Joel.
$51,000.
I went for a drive through the parking lot because I had to get some service on my minivan, and I was like looking at the stickers in the window. I was like, "What world are we in?" I'm like looking at every pickup with a $75,000 sticker, and I'm like, "Is this for real?" I'm like, and then I'm looking at one pickup. It's like $98,000. So it's like $100,000 for a pickup. This is Canadian dollars, so you got to knock off the quarter.
Wow.
But I mean, like, I don't even understand car prices right now. It's gone nuts. Like, people who are still saying the inflation, I mean, it is just so everywhere. But anyways, I actually sold half of my Ford because I just was nervous. So I've still got half the Ford. I sold half the Ford and half the Amazon. That was what I did in the long-term portfolio. Yay. I don't know if they were good moves or not, but I sold Ford higher than this and I sold Amazon higher than this. So feeling okay about those sales. Again, it seems like you sell something, you're happy about it. Hours later sometimes.
You know what? I never do this. I've never owned any cars. Okay. But I just, we have very low miles on all these leases, and I know you overpay, when you buy them after a lease. But I did that. I did and had the cash. I did that on 3 cars, and I had Dana do it too. And Lisa's car, I don't know. I think she's had it for 3 years. It has like 14,000 miles on it or something. And we did that. So I'm like, whatever. I drive an old car. I don't care. Well, I don't go anywhere, but I mean, I'm so glad I'm not out.
The prices are nuts.
Yeah.
Like we were saying it before, like I could turn around. I bought a 2018 F-150. I could probably turn around and almost sell that for what I bought it for. There's some people that are selling and buying that the cars they bought a year ago, and they're actually making money on them. I mean, that's absurd to think that you buy a car, drive for a year and a half, and turn around and sell it and make money on it. What world are we in when that happens? But that's where we're at right now. Because when you're seeing those $90,000 pickups, and I think I bought mine for like 55 or something, probably mine's like brand new going for like 80, 85. So, I mean, you think like I probably could get 50 or 55 for Canadian. We're talking Canadian prices, so knock off the 25%. But it's crazy the world we're in right now.
So
this
Triple D, what
is just not. We haven't seen stuff like this since the 80s.
I know.
So, like, when's the last time we've had inflation like this? And I mean, that's where you take it right back to the jobs number. The reason, you've got this happening is like people can get a job. Anybody can get a job right now. I mean, there's people quitting their jobs. There's a labor shortage right now. This is a tough environment that we're in to
in order to count as like a pay as a in the non-farm payrolls figure, someone has to get a job, right? There has to be a new job added, right? So how do you have people leaving the workforce, and yet also you're adding new jobs? I don't know. It makes, to me, it does not make sense. But anyway,
So
the
Triple
one-
D, we
leave-
want to.
yeah, I know,
Yeah,
none
we
of it
will.
makes sense.
What did you see out there?
Makes sense.
What did you see out
Well, he
there?
just hammered stocks. I mean, they hammered them really across the board. Not hammered, like, I mean, we've been down. We're down, so they knocked 20 handles off of it. But there's just a reason, like it'd actually say this is a pretty good report, and you think, okay, well, this is good stuff. But now they're like, oh no, they're going to raise interest rates. So it's like exact opposite world from where we were a year and a half ago, where bad news was good news and good news is good news. Now we're in good news is bad news and bad news is bad news. So I
And
mean,
no
it's
news is
flipped the
bad news.
script. It feels like this doesn't feel like a bull market anymore. It hasn't felt like a bull market for a long, long time. It's not like it hasn't felt like a bull market for a week or a month. I mean, you've had this cascading sell on all the growth names for a year now. It hasn't felt like a full-on bull market, rah bull for a very long time. And that's like concerning. Is it changing? I mean, or are we going to eventually get back to that? Nobody knows the answer to that question. But again, the uncertainty here, the reactions to finding that we used to always find the silver lining, and now we are the opposite. We're always like Debbie Downer, and we'll find the reason to sell stocks. So I don't know. It's a tough market. I'm very disappointed that you can come in today and the S&P can be flat and Amazon can be up 300 points. It's telling me that
sense. Yeah.
The math has to add up. It's just telling you that, man, they are selling rips like crazy. So I'm scared. I'm scared to be fully invested here right now. Scared to be fully invested.
Amen.
Yeah. All right.
And maybe this is when you want to think about Warren Buffett. You want to buy when other people are fearful. So maybe this is going to be the great buying opportunity of our lifetime. But if stocks were cheap, I would say that's right. But stocks still aren't cheap is the problem. We're scrambling around saying, look how cheap Facebook is 18 or 19 times. I mean, the P multiples on the S&P, when it comes down to being cheap, is 12, 11 times. We have a range that the S&P is trading. There's charts out there. I don't know if we have any of those, Spencer. I'm throwing it on the spot. But when the S&Ps are cheap, it's 10 times, 12 times, 13 times. If it gets really crazy, sometimes you get down below 10. When it's expensive, it's trading 20, 30 times. I mean, at one point in time last year, we were 32 times on trailing multiple. Again, earnings depressed because of COVID, so it wasn't a real number. But we're 24 times, 23 times, 22 times. Stocks weren't cheap. They're starting to get a little bit cheaper, but they're still not cheap. So just to come in here and say, yeah, I want to own all this stuff, Snapchat 100 times earnings, I'm like, what are you buying? 100 times earnings. Sounds scary to me.
Yeah, on your prediction that the low of the move wasn't in Facebook, it did get below yesterday's
that
low.
prediction came to fruition 15 minutes later. Yeah.
Yeah. What was I going to say? Also, I don't know if anyone watched the we streamed the Snapchat earnings call on our channel last night. They talked a lot about the virtual reality and augmented reality, like a lot on that call. So they're also trying to get into this metaverse game.
Who was that? That was
I
talking
don't
about
know.
that?
That was Snapchat.
Well, they gotta. I mean, their business is on. Don't kid yourself. Their core business is under attack too. It's all these what is cool today will not be cool tomorrow. We start with Facebook was just awesome when it came out. Well, Facebook is smart enough that they go to Instagram, they go to other things. They're trying to stay ahead of the curve. But then you have, some of these other platforms. Think about some of these other platforms that have just went off the face of the earth. I mean, there's been so many social media platforms out there.
That has to be scary.
The management has to continue to reinvent itself to stay relevant. So you want to invest in those good managers. And that's why I do believe Zuckerberg. I believe he's usually ahead of the curve and he's smart. I'd be more confident. I don't know the management of Snapchat. I'm not sure. At least they're talking about, doing other things, and that's good news. But I can't pay 100 times earnings in this market for anything. So I'm not touching anything that is 100 times earnings.
Yeah,
Sorry.
I mean, not that I agreed with a lot what Mark Yusko had to say last week, but he was talking about the technology and what has been invested in the last 5-10 years, social media. I mean, it's pros and cons of free speech or whatever, but boy, oh boy, are these companies coming unraveled. I don't know if it's
Just the
going to be
valuations, maybe not even the companies coming
the
unraveled,
valuations.
but the valuations that people were paying were just, it was growth at any cost. It was classic Kathy Wood style, and a lot of retail got FOMO, and they're jumping in, and and that's what we've had. And we've had an unwinding of that over the last year. But now we're starting to unwind in stocks that aren't even that expensive. I mean, I was talking about the value trade, getting hot. And the value trade has held up fairly well. I mean, Berkshire Hathaway has been very impressive. So the value stocks are still holding on, but even, it's cheap stocks sometimes are getting hit. So I don't even know what to say on this market. It doesn't feel like a bull market anymore, though. It just doesn't feel like it.
Doesn't feel like it. Do you feel in charge? All right, let's go to the chat. Drop your tickers for us. We got 9 minutes left in this part of the show, after which Mitch will hop on and we'll go from there. We didn't talk about Clorox today.
I was looking at that chart and it was just hugging support at 166. I think it was 166. How did it do?
We talked about this on Benzinga Live yesterday.
Ooh!
Yeah, their earnings have been decreasing, well, pretty much since they had the huge COVID spike. And EPS light, 66 cents versus an 84-cent estimate. Sales of 1.7 versus 1.66 bill. So that's fine. But what did the bottom line do? Not great. They guided their sales for their EPS for the year was also a big miss. Wow. They guided that their EPS for the year will be between $4.25 and $4.50 versus a $5.41 estimate. They guided that for the year their sales will decline 1 to 4%. So again, COVID play, huge COVID play, and sales are coming back down to earth.
Wow.
This is margins getting squeezed. This is everything that I was saying about Clorox. I've said this for the last in Procter & Gamble, same dang story. Money's hiding in all these things, and eventually this is the unraveling here in one stock of Clorox. Take a good look at this Clorox chart, because eventually I think Procter & Gamble is going to look similar, and Procter & Gamble is right now at all-time highs. So I'm calling it right now that margins are getting squeezed in this type of stuff. Eventually, the money that is hiding in this will come out. I think in either scenario, if it really starts to get ugly, they'll start hammering the staples too. And if we go to rally and the growth starts coming out, they'll start to come out of this stuff too. The money's been hiding this, and I've been wrong about Procter & Gamble, but I've been saying it about Clorox here. And I think I don't want to own anything, because right now, the consumer staples aren't cheap either. They are expensive, about as expensive as they've been in years. So, I mean, some of these are trading 28, 30 times earnings. And yes, the earnings are stable. Yes, they have earnings no matter what kind of economy they're in. So that's why they're playing defense. But they are not cheap at all. And if you're hiding in consumer staples, I think you're hiding in the wrong place. If you're and money managers that have to stay invested, that's what they do. You understand what the big money does. They've got to be invested. Okay, I'm nervous about this market. I'm going to move it to Procter & Gamble. I'm going to move it to Coca-Cola, because those are going to be safe in a down market. If the market really starts to get ugly, nothing is safe except US dollars. And Clorox getting punished, deservedly so. 185 a week and a half ago. What are people thinking? Buying the stock up. I wish it was shorted. I'm not. Am I buying the dip on Clorox? It's down $22. Some stock making a new 52-week low. Whenever a stock makes a new 52-week low, I say you got to go. There's absolutely no reason to own it.
All right,
let's go. It's overdone, though. I will say it's overdone.
Let's go to back to some more tickers in the chat. Here's one that I totally forgot existed. Columbia Sportswear. Who mentioned this in the chat right now? COLM. This was from who threw this out there? I totally forgot this stock was even a thing. I
got a Columbia Sportswear coat. I still have one from like 10 years ago. Those things last forever.
Yeah, it's a good brand.
Oh, yeah, they last forever.
It's a really good brand. Anyway, I've not looked at this stock in a very long time. Forgot it existed.
It's bid up this morning. It must have reported. I didn't have it on my list.
You know what? I think it did report.
It had to do something because it's bid up this morning.
Yeah, hold on. I see it as well.
It's traded 100 shares.
Oh, hey, they reported and they raised their dividend from 26 cents to 30 cents a share.
I kind of so I've been bearish and talking bad about a lot of stocks here. Not saying I'm going to jump in Columbia Sportswear, but I kind of still want to own a little bit of retail here eventually. So I kind of like the retailers. I do think that I don't think we're going into a recession. I do think people are going to continue to spend money. I do think some of the retailers are cheap. So I don't follow Columbia Sportswear enough to even analyze the fundamentals. Like such stock that I would trade once a year. So, I'm not going to give my analysis on this one, but I'll just say traditional retail, I kind of like, if you're getting the pullbacks here in traditional retail, I kind of like those pullbacks.
It's just trading. This is not a bad looking stock. You have some daily lows to lean on, a lot of red candles. I don't know if anybody trades this thing, but if you maybe get it unchanged and you want to lean on the recent low of the move, that's not a bad risk reward ratio. Just, even to get back half of this move.
Worth noting, we are coming into retail earnings season starting, I think, next week, definitely the week after.
I think they're going to be good. I think the retail earnings are going to be good. There's a reason that Kohl's gets, and obviously it's come down from there because they haven't actually, but there's a reason that activists are sniffing around. There's a reason these things are cheap. So as much as I was saying stocks aren't cheap, some of these retailers are ridiculously cheap. I mean, what's Macy's trading? Like 7 times earnings?
Yeah, Macy's is pretty cheap. Macy's is at 7. Wow, very good guess.
There's a reopening trade going to happen here eventually. I don't want to own stocks really right now in this environment, but I tell you, if I was going to own stocks, it'd be retail. I think the retailers actually, or some of the traditional ones are actually cheap. So I think you're going to see more of this, even consolidation, even more activist action, because these things are cheap enough to have that action. You don't get activist action in a Snapchat because there's nothing. It's
Nothing
just
there.
too expensive. Yeah, but you get it when stocks just get cheaper and cheaper. They're like, okay, well, there's core value here. Activists are value investors. Activists come in. Takeovers happen because stocks get too cheap. So when you look at from management perspective, stocks get too cheap, they get taken over. Stocks that have 100 PEs get taken over by other stocks in 100 PEs when we're in bull markets. That doesn't happen in bear markets. It doesn't happen in this market. So if you're looking for stocks that are ripe for takeovers, some of these cheap retail stocks could potentially happen.
All right.
And Paul's saying I was bearish. Listen, I'm bearish certain stocks. I'm bullish certain stocks. It's my job as a trader.
Makes a market.
And you guys come here, I try to teach, but when you want opinions today, you're asking for opinions. I'm giving strong opinions here. So what did I just say? Let's sum up. We'll do the whole, what is it, Lee Iacocca? Then you say, tell them what you're going to tell them. Tell them, and then tell them what you told them. So, okay, I'll tell you what I told you today was I don't want to own nosebleed crap. I don't want to own dreams. I don't want to own nothingness. I want to own somethingness. Stocks with PEs under 10, 9, 8, 7 have been traditional value traps for a while. But I think if we start to turn it around, it's going to be those stocks that lead us out. So I'm still all about value here and not buying the beaten down growth names. That's what I'm telling you.
I'm looking for any of these quote unquote value names on the top of my movers tool this morning, and I see none of them. So it's just not a morning for now.
There's nothing. No, I'm not saying day trading
no,
today.
No, I know. I'm just trying to get a head start on this. But
what is up here today, and you're struggling to find stocks up now because all those techs that we were talking about that were green earlier have turned red. The banks are trading higher for Joel Elconin's point that he made that I was listening to I was trading there is this report makes it easier. It's more ammo for the Fed to raise rates. So that is why you're seeing the banks trade higher this morning. I'm looking at my screen right now. I have Amazon green. I have Unity Software green. Both reports, great reports. Oil is green. Oil seems to be green every stinking day. And obviously a lot of value there too, saying the value trade. And the banks. And I mean, the banks are value trades too. The oil and banks, the P is under 10. So the forgotten sector is probably retail. If you're just looking at, this is still a sneaky value market, whether you like it or not. It's the market we have. Berkshire Hathaway almost made an all-time high yesterday. It was 1% off of an all-time high. We are still in this value-oriented market where money managers are looking to buy stocks with lower PE multiples. It sucks to, come in and, say, the story stocks of 2020. And if you have all those stocks and you've been getting killed in it, I mean, it's about diversification to a certain extent. You should have a little bit of both. Maybe if you're all value, maybe you're using this opportunity to maybe add a little bit of growth to your portfolio. But value is still winning right now. And I don't see that changing anytime soon.
All right, guys, I'm going to let you guys finish it up. I'm going to join Sean Udall here, and he says he's ready to buy some stocks. I'll be interested to see what he has to say.
All right, catch you over at premarketprep.com.
But he's a value guy too.
Yeah.
So
I wanted
over
to
at
bring up this chart.
premarketprep.com, he'll probably be talking the value tech.
I want to bring up this chart. This is the S&P 500 against the S&P 500 value ETF, IVE. So yeah, it is winning by a little bit, and I only went arbitrarily back to the end of October. You could mess with the time frame and change the results here, but yes, you have to look under the. I don't know what the top holdings in IVE are.
SPY itself is value to a certain extent too.
To some extent,
you got to put IVE versus ARKK.
Well, that's not a fair comparison.
It is because it's growth versus value. It's a perfectly fair comparison.
Yeah.
Oh, there you go. Value winning just a little bit. Just a little bit.
No, but Ivy, but
just a little gap there.
No. A fair comparison. Come on, a fair comparison is like the QQQ.
Not really, because you want to know why? What's the PE? Okay, so yeah, Microsoft and Apple have gotten elevated there, but it's like 27, 28. It's not super growthy.
But ARK is growth on steroids, and IVE is just your generic old value fund. So again, I don't know what's in it, but I don't know.
ARK needs to hold the lows. I think it does. I think you're going to see, when you get down at 64, 65 in the ARK names, I think they have another bounce because it was just, a quick 3-day sell-off where, we rallied 20%. We came all the way back down. I don't see ARK taking out the lows today. We're down another $1 here, 68. I think you get near that 64, 65. I think there's a bounce play there. But again, longer-term hat on, I'd still like value.
Someone has to do the NASDAQ versus the Dow. There you go. The DIA, your Diamond ETF, is your Dow Jones ETF. Your Kiki,
and that's value. DIA is value. A lot of lower multiple stocks.
Yeah. So, all right. Money Mitch, come on down, please. We want to bring you on the show for the next few minutes and let you run through stocks on your radar. And then what's going to happen is at 9:15. Oh, he's got the tunes going. At 9:15, we're going to end this show going over to All Access, but we're going to start that show by just Mitch and I hanging out through the open, doing some live trading, talking through the open, seeing what's up, what's down. So we're going to do that next, in addition to the subsequent interviews after that. So I'll see you guys over on our next show, which is going to start off with just Mitch and I hanging out, talking through some trades and some stocks. So, Mitch, what's on your radar today?
Let's do it. It's time for Money. Let's go, baby. I think that's your headphones, though, Spencer. I don't think it was too loud. Music was loud there. Let's go ahead. Let's get it. All right, guys, let's take a look here. I'm still shorting on Roblox here. This was a swing trade. It was a day trade that became a swing trade yesterday. I did see that short report put out. I looked a little bit more into it. I don't think it's really like off too much. Usually short reports get a little bit extreme. I think that in this case, they're kind of on top of it a little bit here. Roblox all the way down towards 60.30s here. Our entry was at 62.40s. We did take some profit into the first move. We still have half the shares left. One swing trade that isn't working well. So we have one that's working, one that isn't. Let's get into the one that isn't working well. Then I'm going to cut it here. I have a stop right now set at 1980s here for Carnival. That's going to be a little bit over $20 loss. We had 20 shares there from 2089. So a little bit over $20 loss there, but the Roblox trade definitely keeping us into play here. Going to get probably stopped out right here at the gates here, but we'll see what happens. What's going on in the chat? How we doing out there? Show me the money, they said Trade Man. Let's get it. It was loud. Hey, well, let's keep it going, guys. Loud as. Let's go. Wake on up. Wake up, calm. Isn't it this time to get to the bell? Let's go ahead. Let's get to it, guys. All right, short snap. That's not a bad one to take a look at. I'll take a look at some of the short trades. If you guys want to throw up some stock, throw them up in the chat. All right, so I was looking to see if potentially we're going to get into some reopening trades, but let's go ahead. Let's take a look at some short opportunities. EMPH is one I'd call out for a short opportunity. If you take a look here, we're going to take a look at the daily chart. You can see on the daily chart, you've had those bounces on up. You've had quite a couple of resistance touch here. I think we could take out the 130.68 and really come back down towards the 120s here, especially if we're going to have a weak open. And you can see here we're already dropping through that level here. I wanted to see it hold that 134 because I wanted to get short around there through that 130, but definitely that bottom line ENPH, you guys can take a look. Solar name, of course. Also, you can take a look at maybe SunPower to kind of get that drop also. So you can take a look at this one. I would watch to see if we could break through the lows here. If you take a look here on the daily, you also see that bottoming action. It looks like it wants to just take out the bottom here. So if it takes out 1470s, you guys can look at that one. Let's keep going with another one. You can take a look at Hood. Hood is one that I'm taking a look at because it is on up, but I really don't think it's going to last here. I think it could break through 1349s here and get that hard downside action. What's going on out there, Ali? You're scalping the SPY. That's what I like to hear, guys. If you guys can do me the favor before we get into some other stocks here, definitely hit the like on up. Support the shows right here on Benzinga's YouTube. And of course, guys, up next, we're going to be getting into some live trading. So you guys smash the like and we'll get into also some all access stocks. Let's keep it going, guys. We have over 1,300 people here. We should have 1,000 likes. Let's get it going, guys. What's up out there, guys? Another one. Let's start taking a look at some positive trade, right? You can take a look at oil. I did see mentioned in the chat some oil stocks there. Ollie mentioning XOM, Shell. You could definitely take a look at those. My call out is going to be on the Chevron Corp. I've been watching this 136 hold multiple times. So you guys see here on CVX, we're going to look for this Chevron Corp to break out through 136 today, getting on up there towards 137. Of course, why could this happen? I'm keeping on watch. Of course, the one thing that I would warn for traders out there right now is Russia. If Russia really gets heavy into, let's say, war, then that's where I could see these investments really getting hit and all of a sudden the SPY dropping, let's say 5-10%, even in one day. So I would be careful out there for you long-term investors. Definitely keep it on watch, but this is going to keep oil keeping riding on up. I would say look at Gush. Gush, I have a 118.25 mark that we're going to look for a breakout through and then up for a move towards 120. So that's 4 points up. Look for Gush to take that move and go up towards the upside. Like always, guys, we want to go ahead and keep on going here. Let's go. Let's go. What other stocks can we look at? Maybe on the short side. Hubs is one that I'd call out. You guys can see here multiple resistance here holding up, the rule of three coming into play. I'll look for this to take out 415 on the downside. This is a more expensive stock, but if you're looking for maybe some options out there, I'd maybe look for a put option on Hubs. All right, let's go ahead. Let's keep going. Let's look at Team. Team is another one I'd look at for it to break down through the 284s. You can see some downside action on that and continue to see it leak out. In another area, BGFV is the one that I'm looking for to start cracking on down. It's been sideways for a long time here. Doesn't want to come back up through the 20s. I think it heads down towards the 1750s today, and that could be a good winner. All right, so let's go ahead. Let's get into stocks from you guys out there. So I'm going to roll on up, and I'm just going to try to go quickly through these. I'm not going to give too many levels, but I'll just try to see what we see out there. All right, guys, what's going on out there? Let's go ahead. Let's start rolling through it. What do we see here? All right, let's go. Let's go, guys. All right, so someone's saying they're long DWAC. Let's take a look at the DWAC. I'd be careful with this, guys. 85 needs to kind of break above here. Multiple resistance on up there. If it does come back, it could come back all the way towards 66. I'd be careful on that stock, but like always, make your own risk assessment. Let's keep going here. AMD being mentioned by Palm Beach Building Company. Hey, well, who knows? Maybe are you Palm Beach, Florida? Let's keep going. Might have to come. Might let you know. Build me a house, man. Let's go ahead. Let's see right here, 119 bottom here. That's what I'd be watching here. If not, we could get back into this gap zone from the 24. If you see the Qs drop on out, you could see AMD get weak here. I would actually be looking for a longer term opportunity. If we could come back towards this 100 mark, we'll see what happens on AMD there. NEE. Nextera Energy, let's go ahead. Let's take a look here. Regulated electricity. It did get a pop on the first. Now you got a couple of sideways days. The real question is, can you hold that support down here at 73.06? Do you come right on back up towards this trend line? Or do you kind of flush through? I'd be watching this one. Of course, one of the ones that I was watching yesterday that wasn't looking well was Duke, and that started getting in the right direction. So if you want to take a look at regulated electric, that's a little bit, I think, of a nicer chart. I'd look at Duke, but doesn't give you that much gains, right? So one thing you can use maybe Duke for is to see if this is trending in the area, in the industry, the regulated electric industry, and see if NEE can really start moving. All right, what's going on out there? Pins being brought up in the chat. Pins. All right, so pins. I would look for us maybe to come out and take out this support that you see, long-term support here near that bottom over here. So I would see this IPO low here where it opened up and see if it takes out that 23.16 on the downside. That's your downside continuation move. If not, I think you're going to get a little bit of sideways action here in pins, maybe a test down towards 25, then it bounces, kind of a choppy day. That's just what I can see out there. Yes, definitely smash the like. Mighty Soldier Trades. I saw you in the canals. I hope you're enjoying the Florida life and have a good one out there. All right, let's go ahead. Let's keep going here. XLE being mentioned here. Let's go ahead. Let's take a look. Of course, energy sector really kind of leading the way, right? I mean, a lot of this is made up of majority of kind of these oil stocks. So let's go ahead. We can take a look here. What is up today? What can you possibly see moving right now? So in this XLE, you got EOG. EOG looks like it wants to take out the 115 and holding pretty well significantly lately. So look for that one. Hess Group. Look at this. Look at this topping action right here, guys. If we get above this and get into the 95 range, I would definitely be paying attention to Hess today. This is one that I'll actually put an alert here for us. Get on up there towards the 95.03s. We can look for pullbacks closer towards 93 and 94 if we're looking for the pullback buy, but we'll see what happens there. XOM is another one I'd give here. These are all the oil plays that are coming out of this ETF. And so you see here how it's holding to break on out. As long as it can hold this 80 support or this candle here, this wick, I'd be feeling good about this to continue on up. We'll see what happens in ExxonMobil and these oil stocks. Forward being mentioned by Meg. Let's take a look here. It did break through the big support of 1886. Until it gets back above that, I'm not bullish. So right now, I'd be looking bearish right now. January payrolls, huge beat. Yes, but I think it confused the market more than it helped the market because a lot of people were expecting to see a loss after that ADP number. And it looks like there was an adjustment made also for December. I think the investors out there and even economists as a whole are like, what is going on out here, guys? All right, let's go ahead. Let's keep going. Kramer's job report means stay at home trade is over. I don't know about that. Stay at home trade is always going to be around, I think, from COVID on, because there's just so many people that are remote now. SoFi being mentioned by Raylan. Let's go take a look at SoFi. So SoFi, I would say just be careful because I feel like it's going to break through the 10. It did want to try to hold up there by the 1350s, but what do you see now? You're seeing 3 resistance there. It could take out the lows here and even get back down, I think, towards $10. So just be careful. I've talked about how I want to be careful with SoFi because it is a SPAC and some of these payment stocks are out of favor. It could take out the IPO low. So we're going to go ahead and pull this 1530 down towards that IPO low right around 1016. That's why I'd be careful, guys. If it breaks that, you could really keep coming down. All right, let's go ahead. Let's keep going. TTD, not a bad one. I don't take a look at that stock too often. So let's go ahead. Let's do that. We're getting towards that 9:15 time. I will be switching on over here towards All Access so you guys can join me there. I'm going to try to knock out a trade live right out the gate. So let's see what we get here. All right, let's go ahead. TTD. All right, so TTD is coming down towards support, but it's kind of on the sideways. I have a monthly pulled on up, looking like we can come closer towards this 58.81 before we really try to find a little bit of a bounce again. Yeah, I could see that coming into play here, and you can see on the daily, you see kind of a bearish pattern. On the monthly, you see a bullish pattern. So I would look for this to kind of break on down here through that 65 today, making its way down towards 58.81. Love the rapid fire approach. I'm trying, Deb. I'm trying to keep it going. Let's go ahead. Vert, let's go and see what we see on this one here. Vert's financial, capital markets, trying to hold there. Looks like you got kind of a cup and handle pattern here coming into play. What I would be watching is for a trend line like this to kind of break on out here. So you see the topping action here. Here's the cup. The action of the cup here. Now we're going to look for it to get on above, let's say 32s could trigger you if you're trying to get it on above the high today. Let's take a look at the intra or the pre-market look. There you guys have it. Above 31.10 is where I'd actually pay attention to it. Where it could get strong, I would look for above 31.88s. Let's go, guys. What's going on out there? Crocs. All right, guys, I got to go ahead and wrap on up here. I'm going to meet you guys over on All Access. This will take you right on over there, guys, so you don't have to go anywhere. But look for Crocs today to see if it breaks the support down here at 98s, going down towards, let's say, 93 area. This is where I think we could get down towards 94s, 93s here. Let's see if we get that quick drop to like 97. You pull back closer towards 99. And then see that flush on Crocs. Crocs is really not one that I'm bullish on, but I mean, I don't own a pair of Crocs. So thinking of getting in Asana on the bullish side or the bearish side, to me, I'm still a bear on a lot of software names. Let's go ahead. Let's wrap on up, guys. Hit the like for me. I do want to say, guys, that let's get that money, guys. I'll see you guys on All Access. Join me on up there. You don't got to go anywhere. This will redirect you right on over.